Hello there, this is in continuation to our previous videos on journal entries. So in this video we have some transactions with us so that we can apply those rules and see how those rules are applied while passing journal entries. So before we move on to transactions and pass the journal entries, I would like to recall what we have studied so far. So today's topic being how to pass journal entries, step-by-step guide. So we know that on the basis of nature of accounts, we can divide accounts into three categories. First being personal account, second being real account, and third being nominal account. So as we know that for every transaction there is a debit side and a credit side. So for personal account, the rule says debit the receiver and credit the giver. Generally these accounts refer to person who may be either a receiver or a giver in any transaction. So if the person is a receiver, then we will debit it, and if the person is a giver, we will credit it. Second account, real account. So generally these accounts refer to assets which can either come into business or go out of the business. So if the asset comes into the business, we debit it. So rule goes like debit what comes in, and if the assets goes out of the business, we credit it with the rule credit what goes out. So the third category is nominal account. As we understand that these accounts refer to expenses or losses and incomes, gains and revenues. So we will debit an account if it is an expense or loss, and we will credit it if it is an income or gain. So the rule goes like debit all expenses and losses and credit all incomes and gains. Incomes here also includes revenues, so we will talk about revenue later. So let's go to these transactions. We have a table here with the first column as transaction. We have various transactions that we will do today, and then we have the step one. As I told you in my earlier video, first step is to identify the accounts involved in a transaction. So there will be at least two transactions, but there could be more than two transactions. So there could be more than two accounts involved in a single transaction. And then second step will be identifying the nature of that account, and then using the table above we will find the journal entry for that transaction. So let's begin with the very first transaction. So the first transaction says Mr. Smith started his business with a capital of rupees 10 lakh rupees. So now we know that Mr. Smith is actually the proprietor of the business and he is beginning his business. So first account that we have found out here is a capital account. Because the amount of 10 lakh rupees is the amount that Mr. Smith has invested in his business as capital, being the owner of the business. Okay, the second account, so here we can see it's capital. The second account that is involved in the transaction is cash, because he started with a business with 10 lakh rupees. So the second account involved is cash. Now we have completed the first step. We have identified the accounts involved. Now the second step would be to find the nature of those accounts. Capital account, as we have already known, represents the claim of the proprietor who has put business in it, which is a personal account, and the cash account, being a real asset, is a real account. So now we know the applicable rule for those. So the rule for personal account, as I've already told you here, personal account will refer to persons only, and a person can be either a receiver or a giver. So in this transaction, person is Mr. Smith, whose account is represented by capital, is giving cash to the business. He's not receiving cash. He's not receiving cash, he's giving the cash. So the rule goes like this: credit the giver. So in this transaction, we'll have to credit Mr. Smith. So we'll write it like this: to capital account. Let's put the amount of transaction given in the transaction. Okay, so generally by convention we write debits first and credit later on, but since we are going by the account which we have encountered first, we are going by that rule. So the second account involved is cash account, which is a real account. Again, as I've already told you, real account are the accounts of assets which can either come into the business or go out of the business. In this case, cash is coming in the business because Mr. Smith has invested the cash into the business. So cash is not going out of the business but coming in the business, so the cash should be debited. So we're going to say cash account debit with 10 lakh rupees. So actually we have already seen this transaction in our earlier video. Now we will go on to more transaction. Now we have to follow the same steps here. So he opened a current account with the bank by depositing rupees 5 lakh rupees. So again you can see the two accounts involved here are the first account being a bank account. So first account being bank account, and the second account is again cash because he deposited rupees 5 lakh. Second account is cash. Again, we have to identify the nature of these accounts. Bank. So bank is actually also a person because bank is also a business which receives deposit for the purpose of lending and earns interest on that. So being a person, we write person, personal account. Now cash, as already we have known that cash is a real account. You might think that if you go by this method, it will take a lot of time, but it's not so, because once we have known the nature of one account, let's say once we have known that cash is a real account, we're not going to go into detail. We already know the explanation behind it. So now we have identified the accounts. Now again, going by the rule, bank, which is a personal account, a person can either receive something or give something. In this transaction, we are depositing the amount into the bank. The bank in this case is receiving the amount, and the rule says debit the receiver, and bank in this case is receiver. So we will debit the account, bank account. So answer would be like bank account debit with the amount of transaction, which is 5 lakh rupees in this case. Okay, the another account involved is cash account, which is real account, and we know about the rule of real account. If something is coming into the business, debit it. If something is going out of the business, credit it. In this transaction, the cash is going out from the business and to the bank. So cash is going out in the business. So cash will be credited in this transaction because credit what goes out as per the rule of real accounts. So to cash account with the amount of transaction. So we have passed this general entry as well. Now let's go to third entry. He purchased raw material for rupees 1 lakh. Now we have to understand that when we purchase goods or material for the purpose of reselling, those goods are called trading goods, and whenever we purchase trading goods, we call them purchases. So any goods bought in the business for the purpose of resale or sales are referred to as purchases. So the accounts involved is purchases, and another account, he purchased raw material for 1 lakh. So if it doesn't say anything, it means they have bought it for cash. So the account involved is cash. Now here we have to be careful. Whenever we purchase goods in the business, we, for the purpose of resale, we treat it as an expense, believing that the goods will be sold and we will have sales, and the difference of sales and purchases along with other expenses will be profit. So purchase is actually an expense, and we have to be careful. Purchases words we use in plural for purchase of trading goods only. So as we know, purchases is an expenditure or expense, and all expenses are nominal accounts, so its nature is nominal. And cash, as we've already known, is real account. We don't need to explain it again and again. So now we have identified the account. So now in the previous two transactions we have already discussed personal and real account, and in this transaction we have a nominal account as well. So purchases, as I've already told you, is an expense, and nominal accounts rule says debit all expenses and losses and credit all incomes and gains. And since the purchases is an expense, it will be debited as per the rule. So we will debit the account with the amount of transaction. And again cash, since cash is a real account and it is going out of the business, we will credit it as already done in the previous two transactions. Okay, so good so far. Let's go to next transaction. In the next transaction they say he bought machinery for ₹2 lakh. Now pay attention. In previous transaction we have bought certain things for the purpose of resale, and if we purchase something for the purpose of resale, they are called purchases. But if we purchase something not for the purpose of resale but for the purpose of using them in the business for the furtherance of business or to continue the business, they are called fixed assets, and they are not treated as purchases. So we refer to them by their name, like machinery, so we'll call it machinery. So the first account involved is machinery, and the second account, he bought machinery for ₹2 lakh. If they don't say how we bought it, it is assumed that we have bought it for cash. Now we have identified the accounts. Machinery, being a fixed assets or a real assets, is a real account, and the rule for real assets is if the asset is coming into the business, debit it. If the asset is going out of the business, credit it. Since the machinery is coming into the business, we will debit it. So the account is real, and cash is also a real account. So in this transaction, an asset is coming into the business and another asset is going out of the business. The asset coming into the business will be debited, which is machinery account. With the amount given in the transaction, and the asset going out of the business, which is cash in this case, will be credited. I think we are clear so far, following the rules above, and yes, you can see that things are going smooth without any problem. We haven't memorized these entries, we are just passing them using the transactions. Okay, so next he says he sold goods to Mathers ABC Limited for 50,000. Again, whenever we sell goods, basically trading goods which we have bought for resale, we have a technical term for that, and that term is called sales in plural. So sales refer to sale of trading goods, or the goods in which a business deals. So when we purchase goods, we do not debit goods account or credit goods account. When we purchase goods for the purpose of resale, we call it purchases and debit it. And when the same goods are sold, we call it sales and not goods credit account. So first account is sales. He sold goods to Mathers ABC Limited for ₹50,000. If the transaction did not say anything about how the sales have been made, we would have assumed that it was in cash. But now it says we bought it from Mathers ABC Limited, and nowhere it says that it has been purchased for cash. So it means it has been purchased from ABC Limited on credit. So another account involved here is Mathers ABC Limited. Now again, let's go to their nature. As we know, sales is an income or revenue, and all revenues or incomes or gains are nominal. So sales is a nominal account. And Mathers ABC Limited, being an artificial or legal person, is a personal account. Now we know by the rule, nominal account can be either expenses and losses, in which case they are debited, or incomes and gains, in which case they are credited. So sales is an income or revenue, so in this case sales will be credited. Since sales is to be credited, we go to credit part of the transaction, write to, and then type sales. With the transaction amount. Okay. Now another account, second account is personal account, Mathers ABC Limited. Already explained earlier. Person could be a receiver or giver. So in this case, ABC Limited is actually a recipient or receiver of the goods. So it will be debited. Debit the receiver. Right here. So debit Mathers ABC Limited. Account debit with the transaction amount. So we have done this entry as well. Now let's go to another entry. In this case, he says he made cash sales of 25,000. Again, we know one account involved is sales, and since they have specified it specifically that it is for cash, we know the second account. Again, we know sales is a nominal account as already discussed above, and cash is a real account as already known. Sales, as we already know, is a nominal account and is credited because the rule says credit all incomes and gains. So to sales account with the amount of transaction, which is 25,000 in this case, and then cash, which is a real asset. So it is coming in the business because when we are selling for cash, we get cash coming into the business, and debit what comes in as per rule of real account. So cash account debit. So this transaction is also passed. Now let's go to another transaction. He paid advertisement expenses of 20,000 rupees. So the account is advertisement expense. Second account involved in this transaction is again cash, assuming it's been paid in cash since it says nothing about it. So we know advertisement expense, it's mentioned in the transaction itself that's an expense, and all expenses are nominal account as already discussed, and cash being a real account. So again, let's pass the transaction. The rule of nominal account says debit all expenses and gains, and since this is an expenses, it will be debited. Advertisement, let me correct the spelling, advertisement expense. Advertisement expenses account debit. With the transaction amount. and another account is cash, which is real, and the cash is going out of the business, so it will be credited to cash account. So you can see we don't have to memorize any entry, and we have done with 7 transaction. Let's go to the 8th transaction. He received commission of rupees 10,000. So the account involved is commission received which is an income, and another account is cash, assuming he has received in cash because it doesn't say anything about it. The commission received being an income is a nominal account, as already explained, and cash is a real account. We have seen it again and again. So the rule says for nominal account, debit all expenses and losses. It's not a loss or expense, and credit all incomes and gains, and it's an income, so it will be credited. So to commission received. With transaction amount of 10,000. Again, the cash is being received in this transaction, so cash will be debited. Debit what comes in. With the transaction amount. We're done with this as well. Now to the second last transaction. He paid salaries of his 30,000 to his employees by issuing a check. So the account involved is salaries account, and the second account involved is now he's paying by a check. So when you write a check, the payment is made from your bank account. So the another account involved is bank. As we know, salaries is being paid, so it's an expense, which is a nominal account, and bank is a personal account, as already explained in above transactions. So now, since salaries are expenses and all expenses are debited, so salaries account debit with the amount of transaction, which is 30,000 in this case, and bank being a personal account is actually giving the amount. On the basis of that check that we write, the bank will be making the payment or will be giving the amount. So bank is not a receiver in this case but a giver. So account for personal says debit the receiver, bank is not a receiver in this case, and credit the giver. Bank is giver in this case, the bank will be credited to bank account. Now we have come to the last transactions, which is similar in nature. He paid rent for rupees 15,000 again. Rent paid is an expenditure, and since it says nothing about it, we assume that it is in cash. So rent paid is an expenditure is nominal in nature, and cash is real, as we have not seen so many times. So again, all expenses are debited, so nominal account says so, and rent paid is an expense, so rent paid account debit with transaction amount of 15,000, and cash, since cash is a real account and it's going out of the business, so credit what goes out, so to cash account credit with transaction amount. So we have done all these transactions. There are about 10 transactions using these rules, following step-by-step guide, and you can see that we didn't have to memorize any of these transactions, and these rules can be used to pass any transaction you can think of that exists in accounting using these rules. So what you need to do is you need to know the accounts involved in a transaction, second their nature, and third the applicable rule that is there, and which is very simple as already explained to you. And then you can pass any journal entries, and if you can pass journal entries, you can do accounting very easily. You will be master at it, as we will see in our future videos. So thanks for now. See you later.